Howdy, this is David Groce, your Texas Tax and Lawman. Today, we're talking about the reporting requirements for partner basis. The basis rule was announced in IRS Notice 2019-66. As a child of the 70s and 80s, I can never forget the larger-than-life Jedis that protected the galaxy in the original Star Wars, which debuted May 25th, 1977. Hey, I was just a 6-year-old kid, but my mama knew I'd like it. So she loaded me up and we drove all the way to Dallas to see it. Never mind, that was like 20 minutes for my mama to drive to Dallas. Now that was the big city. Flash forward 25 years and we see the evil emperor issued Fateful Order 66, which triggered all the clone troopers to massacre the Jedi.
Execute Order 66.
Okay, maybe IRS Notice 2019-66 is not quite the infamous Order 66, but it feels that way. Please understand that the IRS really wants everyone to receive a W-2 and pay their taxes up front. They hate the fact that the tax code allows you to use LLCs, S-corps, partnerships, and pass-through entities to take deductions and keep more money for yourself. This notice is designed to increase the reporting burden on small business owners and hopefully deny our deductions. The truth is, Notice 2019-66 simply means we have to gather and report more details regarding your capital accounts to keep deducting your losses or pay more taxes on your distributions. Let's look at these two aspects. First, the basis reporting requirement says you cannot deduct the loss from your business unless you have basis. For businesses making more than $250,000 per year or having more than $250,000 in assets, this should not be a big deal. These companies are required to prepare a balance sheet. Now, to be fair, businesses this size may simply create a token balance sheet that lists their bank account and then owner's equity. Going forward, small businesses will have to provide more detail on their balance sheets and more information to their tax pros to prove the basis so that they can take their deductions. Second, this new requirement undoes the general understanding of how partnerships pay tax. The general rule has always been partners pay tax on the net profit of the company, not their distributions. Let me say that again. The general rule has always been partners pay tax on the net profit of the company, not their distributions. However, this new rule would actually make partners pay capital gains tax on their draws if they do not have sufficient basis. Let's look at an example. Suppose you have $100,000 in net profit in your company. You then buy a truck and take a depreciation deduction for $50,000. This means your remaining basis is only $50,000. However, you probably still have the $100,000 in the account because you bought the truck on credit. If you take a draw of $75,000 because you have cash and it's yours, the IRS would say you owe income tax on the net income of $50,000, which we all agree with, but that you now owe an additional capital gains tax on the $25,000, $75,000 distribution minus your $50,000 basis. Why? Because you got more out of the business than you put in the business. This can create lots of unintended taxation when owners have not properly tracked and recorded their basis over the years. So what do? Well, it's time to step up our game. Partnership returns will be more complex and you will need to give your tax pro some additional information. However, with good record keeping, we may be able to avoid these two tax traps for our beloved clients. Okay, it may be a stretch to think of tax pros as Jedis, but hey, everybody sees themselves as a hero fighting for the ones they love. And maybe Master Yoda and Obi-Wan won't be the only Jedi to survive IRS Order 66. Until next time, Adios.
Texas tax and lawman legal disclaimer. Hey, I'm a lawyer. You know I have to have some lawyer mumbo jumbo. This is a general information video, not client attorney privilege information. The content is information only and is not directed to any specific facts or circumstances and cannot be relied upon as a legal opinion, even though that would be nice and save you a trip to the lawyer. If you have a specific legal question, feel free to contact David Groce directly or seek qualified legal or tax counsel in your state of residence, state of mind, or whatever place you call home.